It's time to have the dreaded inflation talk, this thing that is already here, and whether high inflation is really transitory like Jerome Powell says, or if high inflation is in fact here to stay. I mean, we saw some serious numbers in the Labor Department's most recent reporting on Tuesday, indicating another surge in consumer prices, but this was unlike anything we've seen in a very, very long time. The recent data from the Bureau of Labor Statistics showed that the All Items Consumer Price Index increased 5.4% for the 12 months ending June 2021. The CPI is what's used to measure the change in prices paid by consumers for everyday goods and services. This CPI increase is the largest 12-month increase we've seen in 13 years, since about August 2008 to be exact. It's hard not to feel its impact when this price inflation is directly hitting our pockets. We've seen the price of food at the grocery store increasing, gasoline on the rise, and if you've been in the market for a used car, then you've probably noticed the impact there the most. The index for used cars and trucks increased 10.5% in June, the most on record. Basically, high inflation means consumers will be able to purchase fewer goods. And while yes, inflation can be blamed in part due to supply constraints from the whole world shutting down during the pandemic, there's also inflation due to the supply of money increasing. In 2020 alone, the US Treasury Department printed nearly 20% of all US dollars in circulation today in order to help stimulate the economy during the reopening. These series of events lead us to where we are today, everyone pondering, how will this inflation impact the stock market? So far, the stock market has pretty much shaken off this news and stock prices have continued to march on higher. So what's the deal? Is inflation good news or bad news? Well, it depends. The stock market usually anticipates that there's a certain amount of inflation each year and adjusts what the expected returns should be against the expected inflation. If, for example, investors expect a roughly 8% return a year after inflation, and inflation is 2% a year, then investors will come to expect a roughly 10% return per year when inflation is factored in. But when there's a sharp rise in inflation, such as we're seeing now, that's when things start to get a little choppy. That's because higher inflation will begin to impact the future profitability of companies. Companies will have to pay more than expected for materials, labor, transportation, and that usually will push stock prices down to adjust for the higher inflation. Generally, growth stocks are more negatively impacted because their valuation is based on future profits and future cash flows. And since they're in growth mode, these emerging companies tend to borrow money to facilitate that growth. When inflation is high, that increases borrowing cost. Value stocks, on the other hand, are less adversely affected. They're already making money, but their cash flow slows with high inflation. But it's still not that cut and dry. Of course it's not. See, high inflation during times of economic expansion is different from inflation when the economy is contracting or in a recession. And right now, we are experiencing an economic boom with the reopening of the economy since the pandemic. Stimulus money is being pumped into households, people are out buying again, and company profits and revenues are rising. And the general sentiment is that the economy may be able to withstand higher inflation. That in part can explain some of the reason why the stock market continues to trek upwards, but on the opposite end, when the economy is contracting, profits and revenues are declining even without inflation, and this can cause more concern for a stock market crash. But ultimately, it boils down to stock market sentiment. Do we in fact believe that the economy can withstand higher inflation or not? Because if in fact we believe, as Jerome Powell states, that high inflation is transitory, then the pressure on inflationary beaten stocks will only be temporary, meaning that now may be a good time to buy growth stocks while there is considerable down pressure on them. But if more data begins to emerge in upcoming company earnings reports and consumer price index reports that high inflation is causing the economy to contract, well, then these growth stocks may continue to fall because the belief will be that this inflation may be felt long term. And right now, we're sort of a mixed bag. On the one hand, we see companies such as Energizer, General Mills, and PepsiCo increasing prices to offset higher inflation and to stabilize their stocks. But it's still uncertain whether rising wages will be enough to outpace inflation. If labor prices can't keep up with the rate of inflation of retail prices, the purchasing power of those wages decreases, meaning many families, especially low-income families, will face real consequences due to higher inflation. So we're still in a wait-and-see kind of position at the moment. But I don't want to leave you on that note. I do believe there are deflationary forces on the horizon, and similar to ARK Invest founder Cathie Woods, I believe the role of innovation technology will lead to easing long-term inflation expectations. 3D printing companies, for example, are starting to play a bigger role in decreasing product and material costs for the car and airline industries. So theoretically, this should push down consumer prices in the near future. You also have companies such as UiPath that is bringing more automation to the workforce, which can further help open high-level positions with higher wages that again will theoretically offset higher inflation. Thus, the debate whether high inflation is transitory or not and how it will affect the stock market in the long term is still too early to call, but the one thing that's certain is if you sit on cash instead of investing it, any rate of inflation will begin to diminish the value of your dollar. Hey guys, if you watched till the end of this video, then please do me a huge favor and hit that like button. I would greatly appreciate it. Thanks for watching, and I'll see you again in the next one. Take care. Bye-bye.